Hi, my name is James Dinsmore, and I am a portfolio manager focused on the convertible strategies at Gabelli. We have a long track record of investing in convertibles, and we have a number of closed-end funds, open-end funds, and separately managed accounts dedicated to the strategy. A convertible bond is a hybrid security combining some of the best attributes of fixed income and equity. A typical convertible pays a coupon and has a maturity like a bond, while being convertible into equity if the underlying stock price appreciates. They allow you to increasingly participate in returns as the underlying equity moves higher, while offering a yield advantage and maturity that help to limit downside participation as the equity moves lower. Over the long term, the asymmetrical return profile of convertibles has led to equity-like returns with reduced volatility. Typical convertible issuers are small to mid-sized companies with opportunities for growth. They come to our market to reduce interest expense relative to straight debt, while reducing dilution relative to an equity offering. In the last few years, this type of company has been out of favor in the market. As interest rates moved higher and the cost of capital increased, companies that need financing to continue growing have seen multiples contract significantly. Convertibles have outperformed their underlying equities over this time, but it has still had a negative impact on performance. We anticipate that the headwind of rising interest rates is largely behind us, and there is now a compelling opportunity for active managers like us. As we evaluate the convertible universe, we look for good businesses that are generating cash or have a straightforward path to generating cash in the near term. We are often investing in companies where the convertible is the only meaningful debt. Ideally, we look for companies with attractive equity fundamentals coupled with a convertible that is attractive in its own right. Over the past year, many convertibles have become fixed income equivalent and offer yields that exceed our long-term expected return. In these convertibles, we are focused on the balance sheet and the company's ability to pay for the bond at maturity. Interest rates should have less of an impact on these bonds going forward, and we expect them to accrete to par over the coming 2 to 3 years. In addition to this segment of the market, we are seeing more compelling opportunities in more typical total return convertibles. These issues offer a coupon and some equity participation with an asymmetrical profile. As these companies exceed low expectations, the convertibles will benefit alongside the underlying equities. Issuance has come at a healthy pace this year, similar to what we saw prior to the pandemic. We expect this pace to continue over the coming years. Our team has a long track record of investing in convertible securities. We have managed them through multiple market downturns, and have seen how they can be a great tool for companies to raise capital despite uncertainty, while offering investors a risk-adjusted way to participate in a recovery. Historically, convertibles offer a compelling way to remain invested in equity markets and increase income while reducing downside participation. The current environment is unique, as it has given us an opportunity to increase the yield to maturity of our portfolios while maintaining some equity exposure in companies where we have high conviction. Thank you for your interest in the convertible strategies at Gabelli. Our expertise in this asset class is bolstered by the accumulated compounded knowledge of our research team, and we offer multiple closed-end and open-end funds for investors interested in this often overlooked strategy.